Good afternoon, everyone. My name is Dr. Mugdha Lele. I'm hosting today's session on behalf of the techx team at Venture Center. And I'm happy to host this third wave of our Only One Theme Awareness Talk series on innovation management. Today is the 11th talk in the series. And for those who have joined us over the last few talks, let me talk a little bit today about our organizers. The organizers of this team, which is Venture Center, we are a technology business incubator where we are supporting startups and innovators from the ideation stage to the entire journey till they commercialize their product or idea. The TechX vertical at Venture Center is hosting this particular series, and the focus is on tech commercialization, tech marketing, intellectual property filing, support for policy for R&D institutes, colleges, universities, where we help them make policies for IP, scientist entrepreneurship policies, so on and so forth, and also industry academia partnerships. In case you wish to know more about Venture Center or techx.in, we will put in the links of our websites into the chat box shortly. So I welcome you to the 11th talk in this wave of Only One Theme. And today's topic discusses only R&D and innovation trends in India. Our speaker for today is Dr. Janak Nabar, and let me briefly introduce him before we begin the talk. Janak is the CEO of the Center for Technology Innovation and Economic Research, where he leads research initiatives focused on innovation and technology policies. He is member of the CII National Committee on Technology and the Expert Group on Technology and has contributed to working groups constituted by the Niti Aayog for ranking national R&D laboratories and developing the Indian Innovation Index. Previously, Janak has worked as an economist and investment strategist in Singapore and with the United Nations High Commissioner for Refugees in Serbia, where he oversaw the performance and financial monitoring for NGO partners. Beyond his research in innovation, Janak writes on India's macroeconomic policies and serves as a trustee and governing council member for various healthcare and education NGOs. Janak holds a BA in mathematics from the University of Pune, where he ranked first in the university, and he also has an MA in mathematics from Balliol College, University of Oxford, as a Radhakrishnan scholar. He also has an MSc in econometrics and mathematical economics from the London School of Economics and Political Sciences. Janak, with this brief overview of your bio, welcoming you to this session and handing over the session to you.
Thank you very much, Mukta, for the introduction, and thank you to Venture Center and Dr. Premnath and yourself for inviting me here for this talk. I'm just going to load the presentation. Is it clear? Visible everyone?
We can see your slides, yes.
Yeah, okay.
Can you go full screen?
Everyone for
Janak, can you go full screen?
Yeah, just go. Just give me a second.
Screen share. Don't say hide.
The better?
So, Janak, on your right-hand side bottom,
yeah,
there is a second one on the, that should work. Second one, yeah. You can just go to full screen mode below. Below.
Yeah, perfect.
Okay.
Thanks.
Great.
Okay.
And there's some disturbance, so I'm just thinking, Mukta, is it from your side?
No, I think it's my side. I'm sorry. I had to come to Bombay for the day, so I've had to park myself somewhere.
Sure. Okay,
Apologies,
let's get started. We'll try.
Yeah. Thank you, everyone. And I'm going to start with the first slide, which really compares and sets the context for India with the rest of the world. As you can see that the huge amount of spending that is currently happening globally is being led by US and China. And the share of spending that most of these countries do is largely dominated by industry. Government plays a minimal role, and higher education is another sector that receives a lot of funding for research. In India,
Janak, just
in the highlighted blue section.
Hold your mic.
Yeah, sure.
So your voice will increase, volume will increase.
Yeah. Let me just. Apologies for this.
Yes.
Yeah, Janak, the other thing you can do is in your near your mute button, there is a audio settings. Okay,
Yeah,
can you see the audio settings on the right of the
yeah,
mute?
yeah, yeah,
Yeah. So in that, you can
yeah.
just cut off the background sound in audio profile. Can you see it?
Just give me a second.
On the Zoom.
No, I need to cut off the audio.
Yeah. So you can just background noise suppression you can do.
That's
Yeah.
you can't hear anything.
Okay.
Can you hear me?
Yeah, we can hear you. Go ahead. Let's continue.
Yeah.
You
Okay.
can just go full screen again. Yeah.
Yeah. Apologies for that. So as you can see that the spending on industrial R&D in India is just 36% of the total spend of 21 billion. Government in India dominates the R&D landscape, and higher education receives just about 9%. As you can see, this is a very clear sort of opposite to what the rest of the world is. India is an outlier in this respect that the government dominates the R&D and innovation spending landscape. Just to give you a key highlight of the key select government ministries that spend on R&D and innovation. As you can see, it's largely dominated by the DRDO, which is the Defense Research Department organization, and Department of Space and Department of Atomic Energy. Whereas the sciences, which is largely led by DST, DBT, CSIR, ICMR, ICR, follow suit. Almost, I would say 78%, as you can see, is dominated by a huge amount that's dominated by the three sectors. So this highlights the total
Yeah.
spending by industrial R&D in India. It's just about 7.4 billion. Just to put that into context, Nvidia, which is ranked number 26 in the world in terms of the top 2,500 global spenders, spends almost all as much as all of Indian industry. Alphabet spends 5 times that amount, and you can see that in the last 4 or 5 years, there's been a significant ramp up in the spending on software and computer services. This is one of the reasons. This is a chart, a table which shows you the top global sectors and also the number of firms that are present in each of the sectors here. Uh, and we can see that if you compare US, UK, Germany, Japan, India with the rest of the countries, uh, there's a presence of Indian companies only in software and computer services. We have a presence in the pharma biotech sector and also in the automobiles and parts sector. uh, on the other hand, some of the major economies like US and Germany and China especially, uh, they have a presence in almost all the top sectors globally. Now, software and computer services globally was number fourth ranked as a spending R&D sector just about 4 or 5 years ago. It's obviously become number one more recently with the huge amount of expenditure that's going into AI, ML, and the likes. Just to compare the structure of industrial R&D with global industrial R&D, you can see that in India it's dominated by pharma, auto, and to some extent, of course, oil and gas has moved up largely because of Reliance, which obviously spends not just on oil and gas but on other sectors as well now. But it's still classified as an oil and gas company. Software and computer services is number fourth, and aerospace and defense is another major sector in India, which is fallen off actually when it comes to global industrial R&D. If you look at the global industrial R&D, what's interesting is, and this is something which I'll cover again a few slides later, is that construction and building materials is a sector that's come up in as one of the top sectors globally, and this is largely due to the spending in China. Uh, in again India, one of the new developments is that electronics is also creeping into the top 10 sectors. It was largely absent for at least the time that we've been tracking it since 2016, and this is a new development that in the last few years we're seeing a push in electronics, but clearly not enough to make it on the global stage. Just one point about the earlier slide is that you can see that there are clear sectors where India is absent, like technology, hardware, electronics, construction, building materials, and these are opportunities for India to. The way we think about this data is that we would look at, say, where is it that we currently exist, where are our strengths, where can we push for greater technology deepening. Clearly the pharmaceutical sector is one area, but also diversification purposes, where all can we diversify into, and healthcare equipment and services, which is again very closely linked to medical technology. You can diversify into electronics. We really need to ramp up our R&D across various sectors, but also push for greater deepening in sectors that we already have a presence in. Um, Quick comparison of the R&D intensity. That is, what is, if you take an average of the top 5 firms in each sector, Indian firms, what is their spending on R&D as a share of sales? And if you compare that to the global averages, you find that pharmaceuticals, actually it's 8% here, but if you look at what's been happening in the last 5-7 years, it's actually been slowing. And this is something which we've noticed, that it was 12 to 14% just about 6-7 years ago. It's dropped to 8 to 10% for the top pharmaceutical companies. Globally, on the other hand, it's gone up from about 12% to 16% over that same time period. Automobiles and parts, again, if you take Tata Motors and Mahindra's, two of the top spenders, they're closer to that 5% global average, even if you exclude the R&D spending that Tata Motors would be doing on Jaguar. But they are up there. Again, aerospace and defense in the case of Indian in the India sector, it's above global averages, but it's largely led by public sector companies. So this is a quick snapshot. Clearly, there are gaps. There are certain areas where we have strengths, and we really need to identify which are opportunities that we could push for more R&D spending also. And these kind of data points actually have implication not just for investors, but also for, I would say, policymakers in terms of designing policies to play to our strengths. This is a quick, we're undertaking a study at the moment looking at, what are the top Indian R&D spenders doing in terms of digital adoption, because clearly that's something which has been, a major agenda item for at least the last 7-8 years. More and more people are talking about it, and through surveys, through our interactions with firms, and also through data that is publicly available. We looked at the top 5 companies in each of these sectors, and we find that there's a clear intent to use AI/ML. There is, if you talk to people who've been studying the sector for longer, there's a little skepticism about the nature of adoption, but it's you can't deny the fact that there are things happening. To some extent, there are firms that are using AR/VR for their customer kind of experience. There are firms that are using it for training purposes, digital twins that are being adopted for various reactions, even in the chemical industry. You have, obviously IoT is something which, interestingly, we find is there as one of the top areas that companies may be looking at. But for some reason, AI/ML seems to be something that they're actively looking at, either introducing to improve their processes, or even embedding in their products to differentiate their product offerings. Now, one may ask, why is it that we we have some R&D going on, but it's we don't really see large Indian companies. It'll be a few that are there on the global stage, and a large part of this, in our view, is that we're very, very content with being focused on the domestic economy. We forget that there's a world out there, and to compete in that world, we need to really differentiate ourselves through R&D and innovation. So just to look at even in the pharma sector, where 70% of the revenue that comes into the major companies is from exports. Software and computer services 96. But as you'll see in the next slide, that although we do have a presence, in several countries and we do export, we're not exporting enough. And what we're not exporting enough of is the high tech manufactured goods. So moving to the next slide, you can see that as a share of our manufactured exports, India exports just about 12.5% of high-tech manufactured goods. And any other major economy, or if you compare it to China and South Korea, they're way above 20%. China and South Korea, in fact, were closer to 30% just a few years ago. So India has been moving up in terms of the value-added manufactured goods. When we started tracking this like 7, 8 years ago, it was about 7%. So it has made some progress, but clearly we need to increase that element of the high-tech component, and that will happen only if you actually focus on R&D and innovation. A quick snapshot of the patents and output that you're seeing. This is patents that are granted both abroad and in India. And if you look at it, clearly you can see that companies that are probably the sectors that are more outward looking, software and pharma, they tend to obviously patent globally a lot more. Automobiles and parts, which is largely domestic focused, in fact, have a large component of domestic patenting that's going on. Having said that, the number of patents that are granted to Indian companies are fairly low. Uh, a I would say about 75 to 80% of patents that are granted by the USPTO tend to go to companies which are multinational. Either they have R&D centers across the country in India, or their wholly owned subsidiaries that are here. Very few that are actually going to companies. Again, a reflection of the intent to spend on R&D and the intent to innovate and patent. Um, I wanted to touch upon, the areas of publications as just as a metric to showcase that we are, at least in our universities now, if you leave the quality of publications aside, uh, the key tech science behind the key technologies, that research is happening in India. And I think it's one of the earlier slides that touched upon how India dominates in terms of government spending, but that government spending actually is not flowing into our higher education system. It's flowing largely into our public autonomous institutions. NCL is one of the top institutions in the country, but it is not flowing into higher education. And one of the points that as a center that we're trying to make is that and hopefully ANRF will allow for a lot more funding to be accessed by higher education, is that it'll be a sort of the output from higher education should also be the talent that is produced. And for us, that is important when you work alongside researchers. NCL does have programs where you have PhD students which are who are coming out and obviously working and leading major institutions in India. But you'd like to see a lot more of this talent coming out of our research institutions, and that's something which today in higher education is a point that we feel would need to receive a lot more funding to support that kind of talent that is needed for our innovation. Just quickly to touch upon a separate study that we did on large manufacturing firms. It's still ongoing at the moment, but in the initial findings of about 1,000 firms, we found that just simple things of structured management practices if you how you promote people, how do you sort of incentivize them, how do you set short-term, long-term goals, how do you make it clearly or visible to a lot of the people on the shop floor in terms of the kind of targets that need to be met, have very positive connections with firm performance. And obviously larger firms would invest in being far more structured, but I think here's an opportunity for even smaller firms that are trying to innovate to borrow some of these best practices and learn from them, and just structure themselves in a way that make them a little more efficient. This brings me to three areas that I'd like to touch upon, some policy questions, again, using some of the data. The first one I want to talk about is some learnings from China. I know this is about R&D and innovation in India, but I feel there are some learnings that we could take away from a study that we've done on China. Uh, this is China's spending on R&D as a percent of GDP starting from 1990. As you can see, we were also at 0.6% back then. We're still at 0.6%. Industry for China was about 43%, of course. This is largely public sector owned enterprises there, but that spending, nevertheless, is being dominated today by industry, accounts for about 76%. And remember, 2.4 of a nearly $20 trillion economy. Again, in terms of large firms, you're seeing, just comparing US and China, we see that just in 2013, there were just about 200 Chinese firms in the top 2,500 list. Today, that's almost 680 firms, whereas in the US, it's stagnated around 804, 820, and it remains to be seen, with geopolitics and dominating the headlines, like how research spending happens globally, what happens to many of these large firms also. But clearly, I'm sure many of you have been following the entire DeepSeek, news, and there's a lot that is happening in China today. And we looked at China sectoral just based on the spenders in the top 2,500 list. And it's interesting that technology, hardware, software obviously is dominating, but construction and building materials, as I pointed out, have become one of the top global sectors. This is something which they have invested in R&D. Now you would think about, like, okay, the high technology sectors, but they're also looking at not just the high tech sector, they're looking at across the board, right? And they're also investing in mining. And this led us to understand, like, why is it that China, in terms of, everybody knows the stories of rare earths, everybody knows its production is largely in China, everybody knows the reserves are largely there. But it's also the smart mining or the investments in R&D to extract it in a way which kind of would minimize the damage to the ecology and the ecosystem. And so, in a way, even the construction and building materials, as we dug a little more around this, we found that large part of their CO2 emissions are happening through building infrastructure. And so here are huge opportunities for all of us to think about how do we tackle the issue of climate change, right? They're not giving up their race to dominate on technology. They want to kind of extract those rare earths. They want those to dominate the tech landscape. But they also want to make sure that that environmentally they are able to tackle those concerns that obviously China is one of the largest global polluters, so they are trying to address it again through science and technology. So for us, tracking policy developments in China over the last when we looked at it systematically, it was clear that they were very clear in terms of the priorities, in terms of making it central to the economic agenda. And that is something which we hope that increasingly it is happening in India, but it really needs to take center stage, because we need to look at the Indian economy through this lens of innovation. Um, this is something which, again, as a center, we've been looking at. We find that in terms of higher education, if you look at gender representation in STEM workforce, we're finding parity in higher education, especially in the sciences, across PhDs, across the master's level. Technology, maybe not so much. It's there around 30% in terms of undergraduate degrees, but also 31% in terms of PhDs awarded for engineering and technology. But what we find is a huge drop off when we looked at public funded institutions and the share of women in the research workforce. And globally, I mean, I think if we look at the focus on innovation and why this is important, why we need diversity for innovation, I think we are trying to address that. There are policies that have been introduced, but this needs to be taken seriously by institutions to ensure that there are policies in place really to obviously this is one dimension of gender, but like just the inclusivity angle is very very important to contribute to innovation, and that's something which I think as policymakers or investors or even academics we really need to be thinking deeply about. And the last slide for me is really, a research question that we looked at with one of our research advisors on what is the scope for new manufacturing ventures. We keep saying that manufacturing needs to contribute to almost 25% of India's GDP. It's been stagnant around 13 to 15 to 17% consistently for the last 30 35 years. And we found that a lot of the new ventures that are coming tend to be dominated by consumer retail, and the likes. Now obviously this is a data which is a few years old, but nevertheless broadly it has implications for the kind of funding that may be needed. Questions need to be asked that if investors are preferring to go into online retail and e-commerce and those kind of investments, then how do we really fund deep tech ventures? How do we really create new opportunities which obviously requires a lot of patient capital, and who's going to fund that, and how do we structure opportunities to invest in these sectors? Having said that, obviously given that services is clearly 50% of GDP's share, there are opportunities. We're seeing that in transport or even in fintech and IT related, but just transport, for example, in auto tech, and these in a way, or logistics tech, and you find that uh, maybe it's not going, when we think about manufacturing, maybe it's not going into manufacturing directly, but it's going into allied sectors which can help strengthen our manufacturing in some way. So this is also an important question to think about, and how do we really support new deep tech manufacturing related ventures as well. So I'm going to stop here, and be happy to take questions.
Yeah. Thank you, Janak. Can I get started with the questions? Hello, can you hear me?
Yeah, Aprinwad, I can.
Yeah. Okay. So
Please.
there's a
Yeah.
question from Vinay Mehta online, which is about the latest budget. The government has significantly increased R&D spending by allocating a dedicated 20,000 crores specifically aimed at driving private sector-led research and development initiatives. Do you think this is too small or too late, and will it drive the R&D investment by industry? Right. Also, you may want to comment on the allocation for ANRF as well, right, which is relatively small.
Yeah. No, so the thinking around that for us is that, you know, obviously it's a start, but if you look at like the last 4 or 5 budgets, there have been very nice announcements, right? And implementation, all of us will know, does take time, and there are question marks. So even in 3 4 years ago, very interesting kind of move that was proposed to fund 25% of DRDO budget towards private sector and higher education institutions. Of the year after that, they talked about opening up ICMR facilities. When we looked at like how many people are accessing these facilities, just 1 or 2 institutions were actually accessing or had opened up their facilities for use. So we really need to. I mean, announcements is one thing, but I think scale and of course follow through and implementation of these is something which we need to get going on as soon as these announcements happen. I think that's something which tends to be a bottleneck, then we wait for the next announcement. So I think it's a positive start, but it's a lot more needs to be done.
Yeah.
For AI and RF,
Ja-
again,
yeah,
yeah, sorry.
yeah, sorry. Janak, I was just wondering if this 20,000 crores is supposed to be something which is meant to be, I think, probably like a loan, right? Uh, to industry. So when that happens, is it going to change industry's interest in R&D? Do you think it can do that?
I think there's an organizational and cultural shift that also needs to come about. Like I showed you the exports numbers, right? And I think unless we start thinking that we want to globally dominate or we want to be present in several countries, it's only then that you're really going to start thinking about investing in the right people, investing in R&D and innovation more deeply. Otherwise, you're going to take advantage of something. Unfortunately, like India had one of the most generous tax incentives on R&D, and there were reasons perhaps it was taken away, saying that almost 8 to 10,000 crores was kind of like not leading to significant impact. That was the tax foregone over like a few years, and I think the issue with that is that companies that anyway spend were taking advantage of it, but by and large, those who really had to think of innovating and spending either were not aware of these kind of incentives or how to access it, or the paperwork that was serving as a bottleneck. Uh, so unless you simplify all these procedures, it's very difficult. If you put just to one of the key things in accessing that weighted deduction was that. You had to have a separate R&D unit. So if you put in place, the need for these kind of structures, or you need to have like three sets of documentation for each time you use this kind of funding. I think for smaller firms who are innovating, it's very time consuming, and they don't have that kind of capital to set up. Right. So
Hmm.
if you really need, we need to think of not just the large firms, we also need to think of the smaller firms and what are the kind of constraints that they are facing. So it's not just about the announcements and saying, oh, they're not taking advantage of it, but it's also, I think, sort of talking to people and understanding the real constraints which are preventing people from wanting to spend. So
Yeah. So there's another question from Ashish Orpe about the PLI schemes. Have the PLI schemes made a dent? The ones floated by the government, and have they made a help manufacturing and also R&D associated with manufacturing enterprise?
I mean, I would say that it has helped to some extent, but it's not, these are things which I guess are not going to be there forever, right? So we need to sort of think more long term and wean ourselves off these kind of dependencies. It may help to some extent, but it's again, if you really need to be globally competitive, then we need to think of not just these kind of supports, but obviously, there are companies who would have taken advantage of moving a base here and taking advantage of these kind of schemes. What we need is how do we deeply think about building that talent and that capability and really impacting innovation and not just manufacturing.
Yeah.
Obviously, manufacturing is very, very important, but I think it's the deeper question is about the mindset and the desire to be an innovator and not just manufacturing, which tomorrow can go to some other country because of certain advantages.
Yeah. So
We
there's
need
a
to scale up
question.
manufacturing, of
Uh,
course.
yeah. There's also a question from Srividya Ravi about China. How does China maintain gender parity and how does our policy differ from this? Maybe you can also talk about a little bit, Janak, about uh, what what has really accelerated the industrial spending in R&D in China? Because they started off about the same place, right? Is it that uh, prosperity brings more R&D expenditure, or is it something more than that? But first question is about gender parity.
Yeah, I'm sorry, I'm not an expert at China's gender parity in terms of its STEM workforce. So
Hmm.
I wouldn't be able to comment on that. But I think in terms of the acceleration of industrial R&D, it's this, it goes back to like almost the 80s, where clearly the plans were laid out in terms of where to spend, what are the changes needed to make the ecosystem more innovative, how do you make even the university system or the public laboratories that were there, how do you refashion them to serve innovation needs better. How the policies that were announced were not just the kind of budget announcements, but actually there were follow through implementations that were happening. There was a lot of emphasis on attracting talent back, creating those opportunities to come back. Some people are skeptical whether it's worked, it's not worked, but there was an active plan to bring back Chinese nationals who are working overseas and attracting them back to very very good opportunities that were created for them, and to work in universities or to create opportunities even in industry. So I think it's a bit of both in terms of drive, but also policies that were very very supportive. Of course,
Hmm.
there are question marks. People will talk about intellectual property and issues around that. But I mean, leaving that's one aspect perhaps everybody will latch on to. But I think it's also the fact that there is a desire to dominate the technology landscape, and that the environment in that sense has been supportive, both from a policy perspective. In if you look at Chinese companies, partly I think the trade wars and the concerns about Chinese buying up technology was that they had access to capital which they could go out and buy technologies. And I think when they were buying up companies or were mergers and acquisitions happening, they were doing it for the purpose of accessing that technology. uh, for us, I think when we go out and buy companies and we acquire, you know, we have to ask ourselves what is it that we're actually doing buying up those companies. Just to think about even Tata Motors buying up JLR, you know, it's taken a long time for, I feel, this is my personal opinion, but the kind of designs, the kind of technology spillover to happen, it's been years. It's not like immediate. So I think strategies of buying up technology companies or buying up startups, there is that culture there. It's not here that I would say this is a common complaint about corporate venture capitalism. Capital is not there in India, and that's why you don't see exits, especially maybe in the pharma sector, for example. But it's something which we really need to think, culturally. If we really want to dominate the technology landscape, then how do we do? We do it in house? Do we spend on buying up companies, and what is it that we're doing it for? What's the purpose of that? So I
Hmm.
think acceleration in China was supported by policy, but also intent.
Hmm. Okay. Vipin Deshpande has a few questions around IP. Would it? His question is: would it spur R&D if the government made it mandatory for listed companies to share details of their IP in their balance sheets, patents received, filed, valuations, all of that? And there's a related thing about how Indian companies don't. We have a big brand, and you know, bigger companies probably. Um, so the question is, smaller companies that receive patents, they do not have a big brand and see patents as addition to their sales kit. However, the large companies do not see any advantage as they have very strong domestic brands. You want to comment on how IP might or may not catalyze this whole process?
So again, we run a program which is for mid to senior level R&D managers, along with Ahmedabad University, and different sectors obviously are represented in this program. And one of the teams that actually taken up IP as a topic. But IP, just filing patents and with the idea that okay, we're going to innovate and we're going to really sort of dominate the technology landscape. It really varies from sector to sector. I mean, obviously patents are important to protect, and then obviously there are ways to manage that IP. So it does help if you're able to license it out and monetize it. not just to protect it. But there are, IP is not the only way to protect that your research. I mean, it could be through secrecy. It really varies across sectors actually. But having said that, I think intellectual property protection is very key, and that's something which we need to understand. And I think Premnath, you all do a lot of work around this, not just in terms of the filing, but also how to monetize it and license it. And I think that's something which we need to start thinking about. Like, not thinking of IP only as a way of protection, but also thinking of like how do we ensure that we don't infringe on other people's IP, or how do we monetize that IP. So there's a lot more to IP, but yes, it's an important component to think about when innovating.
Yeah, I'll request Professor Kusre to ask this question. Trying to unmute Dolly Basilan, but you're not responding. So please let Professor Kusre go first, and then we'll go to Dolly Basilan.
Yeah.
Unmuting.
Hello. Yeah. Thank Dr. Premnath. And I think
Yeah,
thank you so
please.
much, Janak. I think CTIR is really, I think, making an excellent contribution. And I think the numbers you shared were really, I think, very useful. I just want to mention a couple of points. Uh, Essentially, I think how appropriate is really the comparison with the global players, both at company level and at country level. Just to set in context, like in our numbers which you shared for India, the major sectors, of course, are the pharma and IT. And the pharma sector, of course, stands out both for exports and also for the R&D budget. But the main point is that the whole focus for pharma is on generics, and therefore the companies are more concentrating on the efficiency part and the cost part, and not in the fundamental value. So basically, if you want to really take into account the scale and scope and the numbers that we are making comparison with, under what conditions would really be right to have more relevant comparison and make this, I think, whole exercise more relevant, Janak. Dr. Pranav also can, of course, add to that.
Yeah, no, I think Janak, I think it's over to you. A clear
Yeah.
question.
So you're right in terms of the that we've largely focused on generics. In fact, we did a discussion with pharma professionals, and the industry would like to grow. It's 50 billion today in value terms. It'd like to reach 130 billion, I think, by 2030, and ambitious target of like 400 billion or something by 2047. And that growth really will only come when you start looking at more novel drugs and new molecules and those kind of things. You're right. Like the generic space is not going to yield that. The point about comparison, I would say, is not so much that we need to match that level of spending, because obviously, there would be higher costs in terms of spending, but it's really that the question to ask is, are we spending enough? It's not to match, and especially as a share of revenue, that's just a benchmark. In absolute terms, obviously we're not going to be able to match these
Yeah.
large companies, but at least as a share of revenue, and as a share of GDP, what would be appropriate. Now, for example, if you look at China, it's at 2.4%. If you take Israel, it's at 5.6%. The point is that these countries, it's the data really is more about trying to see, okay, increasing spending, and who should be spending. And the fundamental question is, where should that funding, if it's government funding, where is it best performed? If it's technology, for example, is it in industry? So there are a lot of like deeper questions, more than just focusing on the numbers. It's more about saying, okay, if we need to increase that level of spending, how do we make it more impactful? How do we make it more effective? If government needs to spend more, where should it be funding? If industry needs to spend, what should they be spending on? And those are the kind of questions I think, as policymakers, but also as industrialists, we would need to think of.
Yeah,
So I
definitely.
agree that
Yeah.
we can't, say that, okay, because global companies spending 16%, but that's a benchmark. I mean, if you really want to spend 16%, then you should be spending on something meaningful, right? If no one's going to spend on 16%, if they're only going to focus on generics. But the point of highlighting the data was to show really that what we're spending is needs to be ramped up now. How much is appropriate for India is something which we for 20 years now we've had a very target of like 2%, where 1% at least comes from industry.
Yep.
That's how this target has been set. So it's not that we're saying spend 5%, but the larger point is that we need to increase
Yeah.
our spending, and
Yep.
industry is not doing enough.
Yeah,
Yeah,
definitely.
yeah,
Yeah,
Janak,
start with
I will.
Ronald. Yeah.
Yeah, thank you. I'll go to the last question from Dolly, but before that, some administrative announcements from maybe Mugdha or Veda.
Yeah. So let me alert everyone. The QR code for the feedback is projected on the screen. The link is also there in the chat box. And our upcoming talk is on how to write a DPR for taking a loan from a bank. And a speaker, Mr. Shyam Mahale, who's ex-vice president at CCOM, who he has been with CCOM, he will be the speaker for the next talk. So do join us on Tuesday, 25th Feb at 4 o'clock. Over to you, Dr. Premnath.
Yeah, I think floor is with Dolly. Basim.
Yeah. Thank you very much for giving the opportunity to ask this question. So I've been really researching on where the real innovation is needed. So I run a consulting firm, as well as I support entrepreneurs to create innovative projects, both from the point of view of R&D as well as in terms of this thing. So one of the areas that I felt is very neglected is the built environment. When we talk about currently construction, there's so much of construction happening, whether it is the industrial infrastructure that is being built, or whether it is the residential or the commercial property. But the amount of innovation that is needed to really make futuristic buildings which are self-sustaining, have a net zero impact, and also maybe positive impact than the being the negative impact. We are nowhere near it in terms of innovating for that area. Is there some kind of thrust on this area which is visibly available to startups and entrepreneurs, especially in terms of energy and livability index, water conservation, water management, right from the construction stage? If it is there, you're able to save a lot more than what you are actually spending on. The amount of decarbonization that is needed for the new construction is going to be huge. And if we don't really look at it right now, we are going
Yep.
to really run into
I think let's give Janak a chance to answer now.
Yeah, so the point about highlighting, China's story was that they were not just focusing on the high tech, sectors. They were also focusing on very important and critical sectors like what you just mentioned, right? And there is a lesson now. There are, I would say, some of our public laboratories that are working on, building materials and better infrastructure. But again, I think the issue is that the awareness of what these laboratories are doing and showcasing those is true innovations. Creating that connect with those public laboratories and startups is something which is really not, I mean, what Premnath is doing should be replicated across every sort of public laboratory to really bring out some of these key ideas. There's a lot of untapped ideas which are there in several of these institutions, and I think that's something that is a lost opportunity. So when we're thinking of startups and opportunities, it's really the public labs are not reaching out to startups, or startups are not even aware of like what these public labs may be doing, and how could they collaborate, or how could they be working with these institutions. So I think it is a very clear opportunity. I think another great opportunity really is in medical devices, which again,
Yeah, in
Premnath,
fact, that was my second question that I
yeah.
wanted to ask, but for the
No, because it's
paucity
a
of time,
natural.
it
I
is.
mean, we have like just look at the amount of out-of-pocket expenditure on private healthcare, on diagnostics, right? It's There is a demand for like healthcare in India. I mean, we have so many different diseases, right? So it's only natural that this is a huge opportunity, and yet 70% of our medical devices are imported. So I think again, policy focus, saying that we want to dominate in key sectors where there are opportunities, and it's thanks to NCL Venture Center and opportunities like this that you get to hear of new ideas emerging. But this needs to be scaled up. I mean, I really hope that we can one day kind of like have 1,000 Premnaths. Like that's part of like why we set up an R&D managers program was exactly that. That how do we create innovators and thinkers around innovation? So yeah, so these
Uh,
are
So
opportunities that
for the record, I and Janak do not have any deal between us.
yeah. No, but I mean, yeah, honestly, we don't. But it is something which I've always, it's always cited as a great example of where lab to commercialization is happening, right? So and
Yeah.
uh, so we need to kind of like
Yeah,
do this
Janak,
with other
I think
laboratories.
why don't you tell us before we close when is your next report coming?
Soon. So
Uh,
the some of the data was presented from our upcoming handbook. We are hoping
yeah.
that it'll be ready in the next month or so. The data is all ready. This presentation will obviously be shared with everyone, so they'll have access to this data. But the essays that we're working on, we're hoping to touch upon some existing opportunities, but also newer opportunities that India should be looking at and thinking about more deeply. So yeah.
Sure, great. Sorry, I will not be able to take more questions. I want to let Janak leave as well. So thank you very much, everybody, and thanks for joining in. And thanks, Janak, for a very informative talk. So over to Mugdha to close the event.
Thanks,
Just
Janak.
before that, sorry, I just want to apologize for all this background sound. And I was, immediately, like, I was called to Bombay for a meeting, and I had to either do it in the car or do it in a public space. I'm sorry, I couldn't find a room to
Yeah,
keep
that's
Yeah.
fine.
myself.
But we were just curious where you were sitting, by the way.
It's a
Okay.
Starbucks in Thane, so
Yeah, that's what I assumed. A lot of
promote
coffee
creative.
machines in action.
Yeah, sorry about that.
Okay, Mugdha, over to you.
Apologies.
Yeah.
Yeah, thanks, Janak, for making time from your schedule also. And happy to host you sometime soon at Venture Center. So with this, we close today's session. And let me remind everyone, please do give your feedback before you leave this session. Also, our next talk, which is on only writing a DPR for taking a bank loan. And our speaker is going to be Mr. Shyam Mahale, who was Vice President at CCOM. And this is happening on 25th of February 2025 at 4 o'clock. So please do join us on 25th. Thank you so much.